Welcome. In this video, can Onyxcoin skyrocket soon? We will analyze this. Don't forget to subscribe, like, and please watch till the end to understand. When we look at the chart from a broader perspective, a major descending trend line that has been in effect for a long time and has been pressing down on the price stands out. This downtrend impacts not only short-term price movements, but also deeply affects overall market sentiment and investor psychology. This trend line has been tested many times in the past. Each time the price approached this area, it faced strong selling pressure and pulled back. This clearly shows how technically strong the descending trend is and how much respect it commands among investors. The fact that the price has touched this trend line multiple times without breaking it can be considered a classic confirmation of resistance. In technical analysis, the more a trend line is touched, the more seriously it is regarded by the market. A similar structure is being observed in the current situation. The price is struggling to break above this descending channel or trend, and with each contact, a new wave of selling begins. This indicates that there is still strong downward pressure in the market. However, a critical point to consider here is that this trend line might now be weakening due to repeated tests. From a technical standpoint, the more often a trend line is tested, the more likely it is to break. So if the price keeps touching this descending trend and the strength of the reaction is diminishing, it's a sign of fatigue. Sellers may be losing their power, which could signal a potential breakout. A breakout above this descending trend line would carry significant meaning from a technical analysis perspective. This breakout would signal not only a short-term recovery, but also a major trend reversal. The break of a long-term downtrend often signals a fundamental shift in market structure. It's not just a technical reversal, but also a sign that investor psychology is evolving in a bullish direction. Because if the price has been forming lower highs, lower lows for an extended period, breaking this trend opens the door to a new pattern of higher highs, higher lows. This invites medium and long-term investors back into the market. So, a trendline breakout is more than just a line. It's a turning point that transforms liquidity flow, buyer-seller dynamics, and overall market momentum. In addition, when major descending trends come to an end, patterns often emerge. Triangle consolidations, head and shoulders, reversal patterns, or double bottoms can all be precursors to a trend change. If the current price movement is forming within such a pattern, a breakout above the downtrend could lead to rapid upward momentum. Because when a trend breaks, it's not just technical traders who enter long positions. Algorithms and bots also start buying. This leads to a sudden increase in liquidity on the upside. At this point, it's also important not to forget the volume factor. One of the most crucial supporting elements in trend breakouts is volume. If a descending trend is broken with strong volume, the reliability of the price movement increases. If the breakout happens with low volume, it could be a fakeout. However, if the trend breaks to the upside with high volume, it can mark the beginning of a strong rally. The recent gradual increase in trading volume might be hinting that a potential trend breakout is approaching. The current levels are technically very critical. Although the price is still trading below the descending trend line, it is now showing more frequent contact with the trend line and is staying closer to it. This could be a clue that the pressure is easing and a breakout is approaching. The longer the price consolidates below a resistance, the stronger the move is likely to be once it breaks out. In technical analysis, this is referred to as tension buildup. The more tension builds, the more powerful the breakout tends to be. In conclusion, this major descending trend line that remains firmly in place on the chart plays a highly important technical role. The repeated contact with this line could indicate that the resistance is ready to break, but focusing only on trends is not enough. Other metrics must also be considered. Keep watching. When carefully examining the chart, it can be observed that the price movements are forming in line with the Elliott wave theory. According to this theory, market structures move in waves within a specific psychological cycle. The current structure we are observing is most likely positioned within the second wave of a five-wave impulsive movement. In Elliott theory, this second wave is a particularly critical phase, as it represents a period of uncertainty in investor psychology, where patience is tested and many traders experience hesitation regarding market direction. By its nature, the second wave is a corrective wave and is often formed by profit-taking that follows the initial upward movement of the first wave. This correction is a time when those who still don't believe in the bullish trend sell, and some investors exit their positions. Technically, the second wave often presents a sideways or mildly downward structure, as investors remain hesitant and most believe the market will return to a downward trend. This results in the price being squeezed into a certain range, and sometimes moving sideways with low volume and volatility. However, for experienced traders using Elliott wave analysis, the second wave is actually a period of waiting. During this time, the market is allowed to rest, momentum weakens, and overbought indicators return to neutral zones. Because the real opportunity comes with the third wave that follows this period of calm. The third wave is typically the longest, strongest, and highest volume wave in Elliott theory. It's the phase where the market becomes convinced of its direction and buyers begin to enter positions without hesitation. That's why investors who can patiently hold their positions during the second wave can benefit significantly from the explosive power of the third wave. At this point, Fibonacci extension levels become critically important. According to Elliott analysis, the third wave must exceed the height of the first wave. Technically, the length of the third wave should be at least 1.618 times that of the first wave. In some scenarios, this ratio can extend to 2.272 or even 2.618. This means that if we are indeed within an impulsive Elliott structure, the current second wave may be completing its corrective phase, and a very strong upward and momentum-driven third wave may be on the horizon. The characteristics of the third wave are not limited to technical analysis alone. It is also supported by fundamental factors. During this wave, positive news about the market usually increases, sentiment turns optimistic, and commentary about a bullish trend becomes widespread across social media and news platforms. This phase often sees a rise in mass participation, which leads to a significant increase in volume. This powerful price movement, supported by volume, is typically the phase in which investors say, "I wish I had bought earlier," as the price climbs upward like a staircase. In this sense, the third wave is where investors experience the most gains both psychologically and financially. If the second wave is currently nearing completion, then every technical analyst should focus on the price action that follows this region. Because a potential third wave not only brings new highs, but also offers the highest risk-to-reward ratio for investors. In summary, for those who are patient, can read the formations, and apply their strategy with discipline, the real reward lies in the massive third wave that follows the second. Finally, it's worth emphasizing once again that the current price structure is most likely the second wave within the framework of the Elliott wave theory. Although this wave often appears boring, directionless, and uncertain, the third wave that follows is theoretically the strongest and most decisive upward movement. If the price finds strong support at the defined Fibonacci retracement levels and then breaks trend lines with upward thrusts, the third wave movement will have begun. In this phase, patience is of utmost importance. When examining the chart analysis in depth, one of the technical indicators, the Bollinger Bands, is displaying a particularly striking formation. Currently, price movements have entered an unusually tight compression within this indicator, which is clearly noticeable both visually and statistically. This compression signals that the market has been in a prolonged decision-making phase and that a breakout is now approaching. The fundamental concept behind Bollinger Bands assumes that price tends to stay within a statistically defined range based on standard deviation. However, as this range narrows, energy compresses, and this compression eventually results in high volatility. That's exactly why the current tightening we are observing serves as an important warning that a strong price movement may be imminent. Bollinger Bands are composed of an upper and a lower band plotted at two standard deviations above and below a moving average. The distance between these bands constantly varies depending on market volatility. If prices are highly volatile, the bands widen, but when the market calms down, volume decreases, and price action narrows within a tighter range, the bands significantly contract. Looking at the current situation, we can clearly see that the second scenario is unfolding. The price has been moving sideways with low volatility within the inner zone of the bands for quite some time, creating a level of narrowing that is almost constricted. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.